Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Jim, it's a pleasure to be back, and thank you for everyone listening for tuning in.
You just posted a note to me that the investment game is changing. How is it changing?
Well, we sent this newsletter out to people on our newsletter list, and it's also on CanadianInsider.com. You can read that for free in the Market Center. Basically, what's been happening here is a transition from what we call the old boy playbook, and that is the playbook from the Bernanke, Obama, and Yellen years. And how it's changing is how all this Fed stimulus is being digested in the market. 10 years ago, yes, we had QE, yes, we had some U.S. deficits, but nothing like we've got now. We've got both the Fed and the U.S. government at work trying to create inflation. And that is a big difference from the Obama years, the Bernanke, Obama, Yellen years, the old boy years, where you had really the Fed and Washington sort of going in opposite directions. You had the Tea Party that made its stamp on fiscal policy almost a decade ago, constrained government in terms of how big it could get. But you had a Fed that was willing to expand its balance sheet. Well, now we have a Fed who's massively expanding its balance sheet, and even today, Jerome Powell said that he would do more if they have to, and they're going to keep expanding their balance sheet. There's no end in sight. And now, in Washington, of course, the only question is, Jim, the new stimulus package is going to be $1 trillion, is it going to be $2 trillion, or is it going to be $3 trillion, right? So this is a game changer. Well, over the past 10 years, we had trades that worked fabulously. If you were invested heavily into dividend stocks, those tended to work very well. Low volatility ETFs, which were sort of a play on dividend stocks, those were great trades. But going forward, they're likely not to be such great trades. Maybe they can go up, but the problem is if we have inflation, this G economy scenario that we've talked about on the show and that we talk about in our reports. You get our framework by going to Inc. Ultra Money. If we get this G economy inflation, those dividend yields may not be able to keep up with inflation. So while you may get some nominal returns that look good, if you've got inflation could eat into those. And of course, depending on your tax situation, that's a whole different ballgame. You may be paying tax on some of those dividends that are being eaten away by inflation. So really what this means is you've got to at least have some hedge, in our view, into inflation-hedged assets that would do well under inflation, depending on your view on how correct I am on this being a economy inflation type scenario that's unfolding. You would weight your hedges accordingly. And if you really believe we're heading for inflation, you would want to have more of these inflation-hedged assets. So, for example, since inflation expectations bottomed on March 19th. You had the iShares S&P TSX Canadian Dividend Aristocrats ETF advance. It's up as of last Friday about 25%. But that's less than the TSX Composite, which is up 31%. And it's up less than the Horizons Canadian Insider Index ETF, which is up 38%. And that HII, Horizons Canadian Insider Index ETF, it strives to track that in Canadian Insider Index. So in full disclosure, Inc. gets a licensing fee from that. But as we've talked about, Canadian Insider stocks, tend to be inflation sensitive. They're mid-cap oriented, and insiders tend to be most active when they think that they can boost revenue and they can see brighter days ahead in terms of more revenue coming in the door. So under an inflationary environment, we would expect inflation-sensitive stocks like Canadian mid-cap stocks to do very well compared to what probably worked very well under the old boy playbook, particularly when you had low inflation and the U.S. government wasn't overly trying to stimulate the economy too much. They were just kind of doing what they could get away with under the Tea Party. But now we're into a whole different ball game. We're really pushing the envelope in terms of government stimulus. And Jim, I keep hearing all the time, the deflationists, and we have them on In Culture Money all the time, which is great to hear the other side of the coin. Talk about, there's excess capacity. I mean, I hear this all the time. I hear this all the time on Twitter from, sophisticated economic shops. Okay. So where I get my haircut, they're putting up the price. And why is that? Why are they putting up the price? Well, because they, under social distancing rules, can't book as many customers. So, yes, they have excess capacity. When I go and get my haircut, Jim, they have 4 empty chairs. So the deflationists will say, look at all that excess capacity, but they can't use it. So what are they doing? They're putting up the price for the people who are sitting in the chairs that they can use. So that's where I think the deflationists have got it wrong, that they're going to be surprised. And, we keep, I heard the Fed talk today about, inflation is low, but I think that's just a brave game. They know what's happening once a month, but this just gives them great cover to keep printing money, and they aren't going to be stopping that game anytime soon. They're well aware of the debt loads that are out there, and the only cure for this debt hangover that really the economy has had before the coronavirus hit is to print more money. And in a sense, the coronavirus is actually great cover for the Fed, that it's able to potentially get its inflation up. Meanwhile, while it's talking about, we have to do this, we don't have a choice because, things are so bad. So, yes, things are tough, but this is also a very convenient cover for the Fed to really juice the monetary system.
We'll have more with Ted Dixon right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Junior miners, junior gold miners, are they the new hot stock?
Well, speaking of inflation-oriented stocks, junior miners fit that category to a T. Now, let's just be frank here. Junior miners are for speculative investors with high risk tolerances. Something like the Horizons Canadian Insider Index ETF. That's more of an institutional type of investment product. Junior miners are for speculators. Now, that being said, there is probably no asset class that's going to do better. I shouldn't say better, but there is a clear-cut case for junior miners to do well under the current environment. Now, when you've got helicopter money, Jim, and we talked about this last week, the problem with helicopter money is when you throw the money from the helicopter, you don't really know where it lands. But from what I've seen so far, it's landing in junior mining. Okay, now we don't know. Maybe maybe there's just been a few bills dropped and that's it. Somehow I think, the money's, falling into the junior mining space. And, if you liken it to a baseball game, the National Baseball League is trying to get its games going. Talk about baseball for a sec. Where are we in this baseball game, junior mining? Our view is that we probably just finished the first inning here. We saw the Ventures had a great year so far. It's up about 20%, a bit more. We had a bit of a pullback in early July, and it has since closed that pullback. So I think that more or less signals we're at the end of the first inning. We seem to be at the point now where, I see there was a deal that Eric Sprott actually participated in that was priced above market. That was a company called Discovery Metals. It's not a recommendation for Discovery Metals. It just happens to be a fact that they just did a financing. Eric Sprott participated. I don't know if it's closed yet or not, but and it was priced a few cents above market. Now, when's the last time we've seen that in the junior mining space? Okay, so I think sort of the situation where you had an initial re-rating of all these junior miners who've been left for dust for the last few years. We've seen a big boost and sort of all boats have been lifted here. Now I think as we go through this game, it's going to get a bit tougher, but we're still in the early innings, and that could be wrong. Maybe we're in the ninth inning. I don't think so. But what I suspect is that unfortunately most people who end up investing in the junior mining space will come in the ninth inning when it's the most exciting. And really, that's when you want to be heading for the parking lot at that point to beat the crowd. And so right now, it seems like we're in a good spot, to be involved with junior mining if you're a speculator. We've written about this, in our morning newsletters. We've had a number of big wins already, and, a number of companies that we haven't written about have gone up already as well. So it's not just, our Inc. morning report letter that's done well. A lot of newsletter writers out there have enjoyed some success after basically paying their dues for many years, covering the space. Well, now is the time to look at a good subscription service. People who aren't, being paid to tout a stock. Now is a good time to get involved with something like that. Don't wait till the ninth inning. The ninth inning, all the smart money is going to be taking their money off the table. So it's a good time, and you want to certainly do your homework. That goes without saying. But look, we are in the early innings. There's going to be lulls, and you don't want to get shaken out either. A lot of times in a baseball game, you get in the middle innings, it gets a little boring, and maybe your home team's down. But you got to hang in there, especially in the summer, where you've got these, you could have these pockets of boredom in the junior market and pullbacks. That's par for the course. So it looks like we're in those, we're in the early innings, and look, don't, if you're going to get involved, now's the time. Don't wait until all the excitement at the end. That's as I said, that's the time where you want to have finished your hot dog and be ready to leave the stadium.
Well, the millennials who've been using Robinhood and other apps to trade, and they can trade fractions of a share and so on, apparently gold and gold miners and juniors haven't even cracked their top 100 yet. What does that tell us?
Well, that's right. And there is a problem too. I'm not familiar with the Robinhood platform, but there aren't that many platforms in the U.S. where you can actually trade venture stocks and Canadian security exchange stocks. So there are a few, but then they have to chase the OTC stocks. So that time will come. I don't know when. Some of those traders seem to be pretty savvy, but others, and including ones here, will come in on the ninth inning, and it'll be that's not the time to do it. So that now is the time to start looking for stocks that you like. If you've missed it, wait for the inevitable pullbacks. But sure, I think you're going to get a lot of institutional money already that's going to bid up the junior producers, right? Not necessarily the junior gold seekers, but the ones that are producing whatever 10,000 ounces a quarter or up. Institutions will have to look at those names. there's just, only so much money you can commit to the top 3 or 4 senior producers. So it's an exciting time for the space finally, and I don't see the Fed changing gears anytime soon. When they do change gears, it's going to have major implications not only for junior mining, Canadian stocks, but everything. And, I wouldn't want to be long any asset at that point, including treasuries, if they try to pull another, we're going to normalize. That is just going to be a very, very tricky rabbit pull out of a hat. And I don't think the Fed can do it. So I expect for a long time the helicopter is going to be flying, and yes, there's going to be hiccups, but the Canadian market, so long as we have U.S. stimulus, Canadian government stimulus, the Fed printing money, and when I mean printing money, I mean by buying treasuries. Yes, buying treasuries is printing money. I know there are some deflations out there who say it's not printing money, but the money ends up going through the banking system. It ends up recirculating. I'm sorry, that's just the way it happens. But they've also got special purpose vehicles. Even if you don't believe that the Fed prints money by buying treasuries, they're buying corporate debt. That is pure helicopter money. Jim, we even had on Inc. Ultra Money just today. We had David Andolfato from the Federal Reserve Bank of St. Louis, and he's an economist there, admit that, yes, if you want to call it helicopter money, that's what we're doing. But, what we're concerned about is whether we're doing the right policy. Now, that's a whole other issue. But you have a Fed official not even denying that they're doing helicopter money. The game is on, and the inflation game is on. So the question is, will the deflationist be right? Will this just go into real estate and government bonds? Evidence so far is no. Evidence is that it's coming into Canadian stocks, it's coming into junior mining, and a host of other assets, including Big Ten as well. But the helicopters flying over the Canadian mining resource space and those stocks that are inflation sensitive, and some of the big tech areas, and that's where the dollars are dropping, and we'll just have to see if they continue to drop there.
We'll have more with Ted Dixon right after this.
Havent Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Havent's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at haventresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, what's the latest move in cryptocurrencies?
That is a fantastic question. We saw a very interesting development, which we wrote about to our subscribers Thursday, but it's not a very big one, but it's one I just like to keep an eye on because it's basically a play in the digital currency space. They have a number of different businesses in the cryptocurrency area, asset management and advisory services. It's someone out of New York, but it's listed here in Canada. So it's a great company to keep an eye on. And we saw it break out to 52-week highs on Tuesday of last week on no news. I thought, well, this is very strange. So this is signaling something. This is just not happening out of the blue. Something is happening in the space. And so we put out there's actually a free video on Canadian Insider. You can look for it on Canadian Insider. We put it out late last week, and basically saying, look, that Galaxy Digital is moving here. Is Ethereum next? And we went out on a limb and said we think there probably is more to come in Ethereum. And yes, Ethereum, which is sort of a complementary cryptocurrency to Bitcoin, led the charge, and Bitcoin subsequently moved after that over 11,000 on Tuesday. So again, you've got this helicopter money looking for a home, and it looks like now some of it's actually fallen into the cryptocurrency area. We will have to see. the nice thing about cryptocurrency that we wrote about in our July gold report is that we feel it provides a complement to gold as a store of value. And I mean cryptocurrency, I mean in this case Bitcoin. They can work together as stores of value, and with gold being the senior store of value and Bitcoin kind of being the junior up and coming store of value. Still trying to find its way. It's going to be more volatile, but it could probably in our view, is going to deliver a higher return over the long period, or at least have the potential to. Now, I'm not making a prediction. I'm certainly not making a recommendation. But, that's just our view that Bitcoin is, going to be more volatile than gold, but the potential there is bigger. So it's a very interesting signal that we've had. I think you could even probably read a bit more into it. Why did Ethereum lead? Well, Ethereum is the backbone of a lot of this decentralized finance. For those who are not familiar with that, basically there's a whole unregulated industry that's being developed by geeks. These aren't promoters. There are some promoters in the group, but I mean, the drivers behind this are computer programmers and geeks, and God bless them, for all the hard work that they're doing, and they're driven by the profit motive, of course, but there's a lot of entrepreneurial activity going on in the DeFi space. And it's just amazing. You can't keep up. It's just amazing. We've discussed it a bit on our website, but to cut a long story short, if people are building alternative banks on Ethereum, where you can go and you can lend money, you can borrow money, and it's very interesting. Like I'm not going to get into a lot of names, but for example, one of the models is that the pool of cryptocurrency available to lend has to equal the pool of the cryptocurrency that's being borrowed. So there's no sort of leverage, there's not a fractional reserve type borrowing system. So, and now you use what are called stable coins. So you can actually go and borrow US dollars, depending on what the market interest rate is. And so it's not set by the Fed, it's set by supply and demand. You can put your US dollars in a stable coin on deposit and get an interest rate that's, in some cases higher than the 10 basis points your U.S. bank might offer you. That doesn't mean there isn't any risk, of course. U.S. bank deposits, depending on the amount, can be insured. There is no insurance in crypto land. It is all risk. It is all risk. But, for speculators and for the entrepreneurs, it's a risk they'll have to assess whether it's something they want to take. And, so for those who have been moving into the space, they've seen a nice move in these cryptocurrencies over the past week or so. I think it's probably signaling, again, another early inning type situation. But in this case, I think it has to do with the reset of the financial system. So I think the story is much deeper. It's very interesting. Gold is part of that story as well. It's sort of on a different plane. It's in the hard asset area. This is in the digital asset area. I don't see it as a competition. I see it as really kind of two boats kind of heading in the same direction here. And, it's going to be very interesting to see where the final destination is. I don't know exactly how this is all going to end up, but certainly the early developments are quite exciting in terms of what may be ahead in the next few years for the financial system. If this move that we've seen in Ethereum over the past few weeks, past few days is any indication of what might be happening in this decentralized finance space.
Ted, thank you so much for chatting with us.
Jim, thanks for having us back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.